August 16th, 2024, 10 a.m., Beijing National Bureau of Statistics briefing room. A bureaucrat announces with a trembling voice, "We are suspending the release of youth unemployment statistics." What does this mean? The numbers are so horrific they'd rather hide them. According to a Beijing University professor's estimate, the actual youth unemployment rate is 46.5%. That means 1 out of every 2 university graduates can't find a job. December 31st, 2023, midnight, a high-end shopping mall in Shanghai. The luxury store lights are dazzling, but inside the stores are completely empty. Only employees stand around, no customers in sight. In the food court next door, students are splitting a single 10 yuan bowl of fried rice between 2 people. This is the reality of China. You've been hearing a lot lately about how China's economy is struggling, right? But honestly, struggling doesn't cut it. China's economy right now is a ticking bomb that's festered so badly, you don't know where it'll explode first. The Chinese government proudly announces 5% growth rates every year. But guess what? Almost no experts believe it anymore. Statistical manipulation is standard practice, and behind these hollow numbers are massive debts and desperate living conditions. Let me ask you something. Is it even possible for consumption to be dying in a country with 1.4 billion people? What if I told you that in the world's second largest economy, 1 out of every 2 young people is unemployed? What if GDP is supposedly growing 5% annually, but electricity consumption is actually dropping? What if a single real estate company collapsed with debt equal to Finland's entire annual GDP? All of this is China, and it's happening right now, at this very moment. China's economy isn't struggling, it's collapsing. Let's start with that growth rate nonsense. China's GDP statistics? The economics community has been treating them like fiction for years now. Bloomberg and Capital Economics and other international analysis firms are pumping out reports saying China's real growth rate is probably around 2%, half of what the government claims. When the order comes down from above saying make it 5% this year, local officials fabricate numbers to save their own necks. Even former Premier Li Keqiang created something called the Keqiang Index. Since he couldn't trust GDP figures, he decided to judge the real economy just by looking at 3 things: electricity consumption, rail freight volume, and bank loans. But when you look at recent data, you get this miraculous statistical comedy, where electricity consumption drops, but GDP somehow keeps rising. This is a national-level scam, deceiving investors worldwide. Real estate, which props up 25 to 30% of China's economy, has become a massive graveyard. What's even scarier is what's called shadow finance, local government debt. The IMF warned that this debt has exceeded $9 trillion, over 12 quadrillion won, and this hidden time bomb doesn't even show up in official statistics. Local governments that used to fund their budgets by selling land can't even pay civil servants' salaries. Foreign media keeps reporting that places like Tianjin and Liaoning province have debt ratios exceeding several 100% of regional GDP, basically bankrupt. Yet even in this situation, the Chinese government just parrots it's under control like a broken record while pushing citizens off a cliff. Now let's look at people's lives. Why did the Chinese government suddenly stop releasing youth unemployment statistics last year? Professor Zhang Dandan at Beijing University released a shocking analysis suggesting the real youth unemployment rate could be 46.5%, more than double the government's 21%. 1 out of every 2 young people has no job. Even prestigious university graduates end up as delivery drivers or begging for jobs paying less than $10,000 a year. That's why ordinary people are drastically cutting consumption. Deflation panic is spreading. Want to see specifically how much Chinese people's purchasing power has collapsed? In the past, consumers stayed up all night refreshing online shopping sites to stockpile goods, but the 2024 Singles Day sales growth rate was barely 2%, a record low. Alibaba and JD.com even stopped releasing specific sales figures. The numbers were so dismal they'd rather just hide them. What's even more shocking is everyday consumption. Looking at National Bureau of Statistics data, the 2023 retail sales growth rate was announced as 7.2%, but accounting for inflation, the real growth rate is basically zero. High-end restaurants in Shanghai and Beijing are closing one after another. 10-yuan coffee is all the rage, and this consumption downgrade phenomenon where people only look for meals under 30 yuan is sweeping the nation. The Chinese middle class that once dominated global luxury consumption is now flooding into discount stores and cheap brands. What's more serious is the collapse of housing purchasing power. Apartment prices in major cities like Beijing and Shanghai are still sky-high, but young people's incomes are stagnating or declining. Chinese youth aren't just not buying houses, they've given up even dreaming about owning one. That's why the term "tongue ping," lying flat, has gone viral. China's Consumer Price Index has been hovering between negative and near zero for years. This is a classic sign of economic recession. Money needs to circulate for an economy to thrive, so where has all the money gone? Boston Consulting Group data shows that China's top 1% monopolizes over 30% of assets. They said common prosperity, taking from the rich to help the poor, but in the end, only Communist Party officials and their cronies got fat. Household savings rates make it even clearer. Chinese household savings rates have hit all-time highs. Even when people have money, they're not spending it. Why? Because the future is uncertain. Jobs are unstable, Social Security is weak, and housing prices are on the verge of collapse. Who's going to spend money? What happens when 1.4 billion people's consumption freezes? Companies worldwide that export to China are getting hammered one after another. Manufacturers in Korea, Germany, and Japan are already screaming because China, this massive consumer market, is disappearing. Ultimately, the root of all problems is Xi Jinping's one-man dictatorship. Goldman Sachs and Morgan Stanley predict that China's potential growth rate will plummet below 2% within 10 years. Peak China, meaning China's growth has already peaked and there's only decline left. Did you know that last year, foreign direct investment flowing into China recorded its first ever negative? With ridiculous laws like the Counter-Espionage Law treating foreign business people as potential criminals, who's going to invest? The Communist Party is now all in on regime preservation and social control, not economic growth. What future does a country have that crushes big tech companies, killing the seeds of innovation, and drives out entrepreneurs like Alibaba's Jack Ma? This reverse course of destroying market autonomy and trying to control everything through the state is ultimately plunging China into massive stagnation. The numbers we looked at today aren't just statistics, they're the screams of China's collapsing economy. $330 billion in corporate debt, $9 trillion in local government debt, 46% youth unemployment, and the frozen wallets of 1.4 billion people. This is the reality Xi Jinping wants to hide. This massive ship called China has started sinking. Before those waves hit us, we need to face reality coldly and prepare thoroughly. If today's analysis helped your understanding, please support us with a subscription and like. What do you think? Feel free to share your opinions in the comments. Thank you.